Good morning and welcome to GrainTV. Today's May 22nd, 2012. I'm Logan Bridges. To my right is Brock Shimano. Brock, yesterday afternoon we had USDA crop progress and condition come out. What are we looking at here?
Shortly after crop progress came out, the market did open at the CME Group's new hours. We did see the market get pressured by what we saw in the crop progress. If you take a look here, corn has emerged at 76% compared to 48% on the 5-year average and 38% last year. Soybeans, a whopping 76% planted versus 35% last year and 42% average. But I think the story that's going to continue to drive the market is what is going on with the wheat.
Yeah, Brock, well, if we look at spring wheat here, we see that we're 86% emerged compared to 21% in 2011. In our neck of the woods, a much different story this spring than it was last year. Ground was highly saturated. Producers really had a hard time getting the spring wheat crop into the ground, so this is going to be a good thing to keep an eye on. Spring wheat off to a great start here. Kind of looks like the same thing turning over to the soybean market here.
Yeah, we did see drier conditions across much of the Midwest, allowing planters to get rolling pretty quickly across Illinois, Indiana, Iowa, Minnesota. Those areas saw significant gains in their planting progress for soybeans. If you take a look here at this chart, 2012, you can see the red line, we're quite a bit ahead of where we were last year, the yellow line, 2011, and where our 5-year average is right now. Right now we're sitting at 76% planted on soybeans.
Yeah, certainly. Well, this crop is off to an early start. It also looks like it's off to a very good start here if we turn our attention over to the condition ratings. As you can see, corn, 77% good to excellent rating. That came out yesterday afternoon compared to 63% last year. Spring wheat, 74% good to excellent compared to 68% in 2011. And winter wheat, 58% good to excellent compared to 32% in 2011. Certainly looked like it pressured the wheat market here a little bit in the overnight session. We see that we had Chicago wheat down 19, Kansas City wheat trade down 14 on the July contract there. So that's going to be a good thing to keep an eye on. That kind of wraps up the first half of our show here. We're going to take a quick commercial break, come back and take a look at the Fire Tip platform, watch these markets trade live.
GrainHedge is more than just futures trading. Clients receive our cash grain optimizer showing spot and forward bids within 200 miles of your farm. We take into account your trucking costs to find your best-selling opportunity. We provide in-depth basis mapping, historical basis and cash price charting. Every day we show you your best price and if it meets your profit goals. Contact GrainHedge today to get started.
Welcome back to GrainTV. The markets are open in Chicago, so let's turn over to the Fire Tip trading software for the live quotes. Old crop corn is down 7.5 cents, new crop down 7, old crop beans down 4 3/4, new crop down 7 3/4, wheat in Chicago down 18, and Kansas City wheat off 12 3/4 as well this morning.
Yeah, Brock, well, the wheat complex is really leading the grains to the downside here this morning, but that's not been the case here over the last couple of trade days, kind of on the heels out of these production issues from Russia. If we take a look here at a daily Chicago wheat chart for July delivery here, you can see that we really rallied from around the $6 area up around $7. Looks like we found some resistance here around $7. We are trading lower today, kind of on the heels of that crop progress report. But this morning, Sovecon did come out and kind of confirm what the trade has been worried about, is that Russian wheat exports will be slashed. We saw this morning they projected Russian wheat exports down to 14 million tons for the 2012-2013 marketing year. That compares to 20.5 million tons from last year. So a big reduction there. One of the big reasons is that there's a shortage of grain at key Black Sea export markets. They're going to have to be sourcing grain from interior Russia. They're going to have to be trucking it in, training it in, and that's going to add a premium onto the export price there. Obviously, that's going to make U.S. wheat exports more attractive here, and as a result, we've seen about $1 added onto that Chicago wheat contract. So that's a good thing to keep an eye on here. Follow us on Twitter, @GrainTV is where you can find us. We'll be tweeting about this situation as it continues to develop. That kind of wraps up our show here for Tuesday morning on GrainTV. Thanks a lot for joining us. Have a great rest of your day.